All right, so today we're going to be taking a deep dive into this Morningstar report on AT&T.
Yeah.
Ticker symbol T.
TP.
And this report is dated January 3rd, 2025. So, pretty recent.
Yeah, very recent.
We're going to be talking about earnings,
Of course.
analyst notes, business strategy, and outlook.
Mm-hmm.
Bulls, say bears say,
Sure.
economic moat, fair value, and profit drivers.
Okay.
Risk and uncertainty in capital allocation.
We'll look at all of those things.
So basically everything you need to know.
Well, in terms of, making an investment decision,
Yeah.
you really want to look at all of those things.
Exactly. And,
I mean, that's your money.
yeah, absolutely.
If you decide to
Your hard-earned dollars.
Exactly.
Yeah.
So let's get started. Let's start with the analyst note from December 3rd, 2024.
Okay.
So this analyst note highlights AT&T's plan to invest $22 billion annually in their networks through 2027.
That's a lot of money.
It is a lot of money.
Yeah. And this is interesting because...
Despite that, investment analysts are projecting only low single-digit revenue growth,
Okay.
which might not sound very exciting.
Yeah, not initially.
No, not initially.
Right.
But the exciting part here really is the free cash flow expansion.
Oh, okay.
Yeah, and this is what will really kind of impact you if you're an investor.
Right.
So they are expecting free cash flow expansion, and they're also earmarking $40 billion for shareholder returns over the next 3 years.
Oh, wow.
So dividends and buybacks.
Okay, so it's sort of like a slow and steady wins the race kind of
Yeah.
situation.
Yeah, low growth, but good cash flow expansion.
Okay.
Yeah, and they're rewarding shareholders.
I like it.
Yeah.
So where is the bulk of that $22 billion going?
So a large portion is going towards expanding their fiber network.
Okay.
They are aiming for 45 million locations by 2029, including 5 million through joint ventures.
45 million.
Yeah. So to put that in perspective,
Yeah.
Verizon's fiber network is projected to reach a little over 30 million locations by then. And T-Mobile is even further behind.
Wow.
So they're really ahead of the game there.
Okay.
Yeah.
So does that give them like a really strong economic moat?
It's a good question, and the analyst actually says
Okay.
that AT&T does have a lead, but it doesn't necessarily dramatically change the economic moat rating.
Oh, okay.
So they're maintaining their $23 fair value estimate, and they're sticking with their narrow economic moat rating.
Okay.
What's interesting is they actually think that Verizon might be a better buy right now.
Okay, interesting.
Yeah.
So big investments, a potential edge with all that fiber, but maybe not a guaranteed win just yet.
Yeah, I mean, it's,
Yeah.
it's definitely something to kind of keep an eye on.
Right.
But yeah, it's not a sure thing.
What's the overall game plan here? What is AT&T's core strategy?
So they're focusing on, two major things.
Okay.
One is the fiber network expansion that we just talked about, and the other one is aggressive 5G deployment. Yeah, so they're basically doubling down on building the best infrastructure to kind of solidify their competitive position.
Got it.
And the outlook is positive.
Okay.
They're expecting rational competition in both the wireless space and broadband,
Okay.
which should lead to that modest growth and that solid cash flow.
Right, which you talked about.
Yeah,
So it's
yeah.
all about building that strong foundation for the future.
Exactly.
Okay. You mentioned rational competition.
Right.
What does that mean?
What
What does that wireless market landscape look like right now? Are they in a fierce battle for customers?
That's a good question.
Yeah.
AT&T is actually the third largest wireless carrier in the U.S.
Oh, wow. Okay.
Yeah.
I would have thought they were number one.
They used to be, but right now it's Verizon and T-Mobile
Okay.
who are ahead of them.
Got it.
Don't let that ranking fool you. They are still a major player.
Okay.
They have scale, they have a lot of valuable spectrum holdings, and they also have really strong financial resources.
Okay, so
They're not going anywhere.
they're not going anywhere.
Okay.
And in terms of the competition,
Yeah.
it seems like the big three have moved past those price wars,
Oh,
those crazy price wars of the past.
right, like those crazy deals.
Exactly. Yeah. So they're focusing more on price increases and smarter promotional campaigns.
Okay, so that's good for business, right?
It is much more stable.
Yeah.
And also the 5G upgrade cycle is kind of winding down.
Okay.
So there's less pressure to kind of outspend each other.
Right, to get the newest
Exactly.
technology.
So there is a potential disruptor on the horizon,
Okay, who's that?
a company called EchoStar.
EchoStar.
Yeah.
Right.
But they're pretty small and unlikely to really shake things up.
Okay, so we've got a strong network, relatively stable competition. It seems like AT&T has a pretty decent foundation.
Yeah.
But let's talk about those fixed line investments.
Sure.
Why are those so important? So you know those fiber investments we were talking about?
Yeah.
They're really a key to AT&T's future.
Okay.
They already have a deep fixed line network across most of the U.S.
Okay.
And they're just pushing really hard to expand that fiber footprint.
Okay.
They're aiming for 30 million homes and businesses by the end of 2025.
Wow.
And they'll likely continue expanding even beyond that through joint ventures.
Okay, so I'm seeing the big picture here, but what does that mean for, like, the average person? Why should I care about fiber?
So, imagine like lightning fast broadband,
Sure.
Really robust data services.
Right.
And it also strengthens wireless coverage.
Oh, yeah.
So less dropped calls.
Oh, like that.
Yeah. And what's interesting here is that their combined fixed line and wireless offerings could give them a serious advantage over cable companies.
Oh, okay.
Yeah, in the long run.
Interesting, because cable companies have tried to kind of get into the wireless game,
Right, they have.
but they don't have, like, their own nationwide network.
They're basically relying on Verizon.
Yeah, exactly.
Yeah, so AT&T, on the other hand, has the full package.
Right, they've got it all.
Yeah, so that could be a big win for them down the road.
I'm starting to see the potential here.
Yeah.
Okay, so every investment story has two sides.
Right.
Let's hear what the bulls and bears are saying about AT&T.
Okay, so the bulls are really excited about, that nationwide 5G network
Right.
and that massive fiber network.
They've got a lot of it.
They do, and they see it as a really powerful combination. It
Oh,
gives
yeah.
them a real edge over the competition.
Got it.
They're also optimistic about that stable wireless competition that we talked about.
Right.
They're expecting, more predictable pricing, which is always good for business.
Yeah, for sure.
Um,
Okay, so sounds pretty promising.
yeah,
But I'm sure the bears have some concerns, too.
they do.
What are they growling about?
So the bears point to the huge cost of staying on top in the wireless world.
Okay.
AT&T spent $40 billion on spectrum recently, and they haven't really seen much extra revenue yet.
Oh, okay.
So
Yeah, $40 billion's a lot
it is a lot.
of money.
And, they're also worried about the tech landscape is always changing.
Right.
And they're worried that it could make AT&T's wireless business less special
Okay.
and open the door for more competition and potentially squeeze profits.
So they're worried about the cost of staying ahead of the game
Yeah,
and the potential for competition.
exactly.
Okay.
And then there's the elephant in the room.
Which
AT&T's debt.
Oh, yeah, they're dead.
Yeah, the bears are concerned about their ability to manage that huge debt load,
Right.
especially with that high dividend payout.
That we talked about.
Yeah. And there's also the issue of potential liabilities from those old lead-sheathed cables.
Yeah, you mentioned that earlier. That's
Yeah.
kind of scary.
It is, yeah.
Okay, so some valid concerns.
Definitely.
It's a bit of a balancing act, it seems. We talked about AT&T's economic moat earlier, and the analysts gave them a narrow rating.
Right.
Can you kind of break that down for me? What does that mean, like, for investors?
So an economic moat is essentially a company's ability to kind of maintain a competitive advantage
Okay.
and generate profits over a long period.
Right.
So for AT&T, their wireless business is really at the core of their moat.
Okay.
But returns have been squeezed lately
Okay.
because of, those heavy investments in spectrum and network upgrades.
Right, so the spending is impacting their profitability.
It is.
Okay.
But the good news here is that they're still generating returns slightly above their cost of capital.
Oh, okay, that's good.
So that means that they are making a profit even with all of that heavy lifting.
Right.
Yeah.
Okay, that's reassuring.
Yeah.
But you mentioned this term efficient scale earlier.
Yes.
How does that play into AT&T's moat?
So efficient scale is a really key concept in the wireless industry.
Okay.
And it basically means that having a large customer base like AT&T makes them more efficient and profitable over time.
So size does matter in this industry.
Size does matter in this industry.
Okay.
Yeah.
I guess that explains why companies like EchoStar and Comcast really struggled to
Right.
compete with the giants.
Exactly. And their failures really highlight the power of, AT&T's position.
Right.
And for now, that big three dynamic seems pretty stable.
Right.
They're not really battling too fiercely for customers.
Right.
Which means less price volatility.
Right.
So creating a much more predictable market for investors.
Stability is definitely something I look for
Yeah,
when I'm considering an investment.
it's important.
So the wireless business seems to be the heart of their moat.
It really is.
What about those other business segments?
Right.
You mentioned enterprise services
Yeah.
and consumer fixed line.
Yeah.
Do those have moats too?
So not in the same way as wireless.
Okay.
The fixed line enterprise service segment is facing some challenges, and revenue has actually been declining over the past decade.
Oh, wow.
Um,
Okay.
so yeah, that's
so good.
not so good. No.
Right.
And then for consumer fixed line,
Mm-hmm.
they haven't really developed a strong moat yet.
Okay.
But those aggressive fiber upgrades that we were
Mhm.
talking about are putting them in a much better position
To compete.
with the cable companies. Yeah,
Okay, so they're playing catch up, but
they are.
they're catching up.
But they're catching up fast
Okay, so wireless is the star of the show.
for now. Yeah.
But those fiber investments could be a game changer for that consumer fixed line business.
Absolutely.
Okay, let's move on to what really matters for investors like me.
Sure.
Fair value and profit drivers.
Okay.
What's the analyst take on those?
Well, after their Analyst Day presentation, the analyst actually bumped their fair value estimate up to $25 from $23.
Oh, okay.
So that kind of, reflects their optimism about potential cost savings from shutting down those old copper networks.
Right, because they're going all in on fiber.
Yeah.
Okay.
So,
But what does that $25 fair value estimate mean for someone considering buying AT&T stock?
So basically, it means that based on their analysis of, AT&T's future cash flow, taking into account revenue growth, profit margins, investments, all that good stuff, they believe the company is intrinsically worth $25 per share.
Oh, yeah.
And right now they're trading a bit below that, around $22.67.
Okay.
So it might be, undervalued by the market.
Okay, so potential upside for investors who buy in now.
Potentially, yeah.
Okay, but before I get too excited, let's break down those profit drivers.
Sure.
You mentioned modest revenue growth per wireless customer.
Right.
What does that look like in real numbers?
So they're estimating that postpaid phone revenue per customer will reach about $60 per month in 2028,
Oh, okay.
up from just under $56 in 2023.
Okay.
So, not a huge jump, but,
It's slow and steady wins the race.
yeah, exactly, stability.
Yeah.
And consistent growth are really the themes here.
But they're also banking on growth from connected devices.
Yes.
It seems like everything is getting connected these days.
Absolutely everything.
Cars,
Our alliances.
appliances,
Yeah.
wearables, all of it. Yeah.
Yeah.
Huge potential there, in the Internet of Things.
Right.
And edge computing,
Okay.
which basically means, processing data closer to the source,
Got it.
reducing latency.
Okay.
So they estimate they're already generating about $2 billion annually
Wow.
for connected devices.
Okay.
And they project that to increase by roughly 25% over the next 5 years.
That's impressive.
Yeah, it is.
Okay, you also mentioned that wireless margins are expected to hold steady in the low 40s.
Yes.
How do they plan to maintain those margins when, the cost of running a network is constantly going up?
That's a really good question.
Yeah.
I think they're betting on a couple of things.
Okay.
One, they're implementing cost efficiency measures across the board.
And the second thing is, as the market matures, customer growth will slow down,
Okay.
which means they don't have to spend as much to acquire new customers.
Oh, I see.
Yeah.
Yeah.
And so this shift should naturally boost their profitability.
Smart.
Yeah.
Okay, so the wireless business seems to be in a good spot, even if the growth isn't explosive.
Exactly. Yeah.
But what about consumer broadband?
Right.
You were pretty enthusiastic about their fiber expansion.
Yes.
Walk me through why that's such a big deal for their profitability.
So, remember, they're planning to shut down most of their copper network by 2029.
Right.
And so this move will free up a significant amount of cash flow and reduce maintenance costs.
Oh, okay.
And as they transition more customers to fiber, their profit margins should expand considerably.
Okay, how much are we talking here?
So initially, they projected a 35% of EBITDA margin.
Hold on, what's EBITDA?
Right. So EBITDA stands for earnings before interest, taxes, depreciation, and amortization. And it's essentially, it's a measure of a company's operating profitability
Okay.
that gives a clearer picture of their core business performance before factoring in things like debt and, some accounting quirks.
Okay.
So in simpler terms, a higher EBITDA margin usually means the company is more efficient at making money from its operations.
Got it.
Yeah.
Okay.
So anyway, they were initially projecting 35% EBITDA margin for consumer broadband in 2028.
Okay.
Now they're expecting it to exceed 40%.
Wow, that's a big jump.
It is, yeah. And to put that into perspective,
Okay.
some cable companies like Cable One are already generating EBITDA margins above 50%.
Wow.
And a key difference here is that these cable companies aren't burdened by legacy television revenue,
Oh, I see.
which, is a drag on margins.
Okay. 50% EBITDA margin is pretty impressive.
It is, yeah.
So it sounds like fiber really is the key to unlocking profitability in the consumer broadband market.
It certainly seems that way.
Okay. But let's not forget about enterprise services.
Yeah.
You mentioned earlier they're facing an uphill battle.
They are.
What are the main challenges in that segment? Well, the report points to, technological changes and shifting customer preferences
Right.
as major factors that are putting pressure on revenue.
Yeah.
Basically, businesses are constantly looking for faster, more efficient, and more customized ways to communicate and manage their data.
Right.
And AT&T needs to kind of stay ahead of that curve.
It's a constant race
Yeah.
in the telecom world.
And they're not just competing with other traditional telecom providers.
No.
They're also facing competition from, tech giants and, specialized software companies
Absolutely.
offering cloud-based solutions.
Cloud-based solutions communication platforms.
Right. So it's not enough for them to just have a great network. They have to constantly innovate,
Exactly.
offer those value-added services that businesses are demanding.
That's right.
Okay, so they need to leverage their expertise and their vast network
Yes.
to provide those complex communication solutions
Uh-huh.
that businesses with diverse geographical needs
Right.
require.
Absolutely. Yeah.
Okay, so we've got a good understanding of the individual business segments,
Yeah.
but let's zoom out. Look at the big picture.
Sure.
What's the overall financial forecast for AT&T?
So they are projecting a consolidated revenue growth of about 2% annually over the next 5 years.
Okay.
So not a showstopper, but respectable for a company of their size.
Right.
And they're expecting EBITDA to grow slightly faster
Okay.
at about 3% as they kind of wrap up their mid-band spectrum deployment and capital expenditures start to decrease.
Steady growth
Steady growth.
with improving profitability.
Yeah.
I can see why the analyst is cautiously optimistic.
Yes.
But let's dig deeper into those uncertainties we touched on earlier.
Mm-hmm.
You mentioned regulation as a major wild card.
Yeah.
Can you elaborate on why that's such a big deal for AT&T?
So remember, wireless and broadband are considered essential services now,
Right.
much like electricity or water.
Got it.
So this means that the government has a vested interest in ensuring that, they're affordable and accessible to everyone.
Right.
So if regulators decide that AT&T isn't providing adequate service or is charging too much, they could intervene.
Oh, wow. Okay.
Yeah, they can impose new rules, force them to lower prices,
Okay.
or even open up the market to more competition.
So they're under the watchful eye of the government,
Yeah.
which could really impact their pricing power
Yeah,
and profitability.
exactly.
That makes sense.
Yeah.
What about the technological risks?
Right.
Wireless technology is constantly evolving.
It is.
How could that disrupt AT&T's business?
That's a good question.
Yeah.
That's the million-dollar question.
Yeah.
Technology is both an opportunity and a threat.
Right.
On the one hand, they could benefit from new advancements that make their networks, even faster and more efficient.
Like 6G?
Exactly, yeah.
Right.
But there's always the risk of disruption.
Right.
You know what? If a new technology emerges, that completely changes the game, making their current infrastructure obsolete.
Wow.
Think back to when landline phones were the standard, and then mobile phones came along and just revolutionized the industry.
Right.
That's the kind of disruption that keeps telecom executives up at night.
Okay, so they have to be nimble
They do.
and adapt
Yeah.
to these technological shifts or risk being left behind.
Exactly.
It's almost like they're making a big bet on fiber,
Right.
hoping it's not the next landline phone.
Exactly. Yeah.
Or what if the cost of providing wireless service just plummets,
Right.
and then you have a bunch of new competitors coming into the market undercutting their prices?
It's possible. Yeah.
Okay, so some real possibilities there.
Yeah.
So we've got regulation and technology as two major unknowns.
Right.
But let's not forget about that mountain of debt we talked about earlier.
Yes, the debt.
How big of a problem is that for AT&T?
It's definitely a concern.
Okay.
That debt load really limits their flexibility in the future.
Right.
If they need to make a major investment to stay competitive, especially, in the face of rapid technological change,
Right.
they might not have, the financial wiggle room to do so.
So debt can be a double-edged sword.
It can be.
It can help a company grow,
Uh-huh.
but it can also become a burden.
Absolutely.
Right, if not managed carefully.
Okay. And
Yeah.
then there's that potential for liabilities
Right.
related to those lead-sheathed cables.
Yeah, that could really, add to their financial woes.
Yeah, that's kind of scary.
It is, yeah.
Okay, so we've covered a lot of ground here.
Yeah, we have.
We've talked about earnings analyst notes,
Mm-hmm.
business strategies, risks,
Mm-hmm.
their debt.
Yeah,
But let's talk about their capital allocation strategy.
sure.
You mentioned earlier that they received a poor rating from Morningstar.
Yeah,
What have they done that's raised red flags? So their past decisions haven't always aligned with maximizing shareholder value.
okay.
For example, they've engaged in, poorly timed share buybacks,
Okay.
which, a share buyback can be a good thing,
Right.
but only if it's done, when the company's stock is undervalued.
Like timing the market?
Yeah, buy low, sell high.
Right.
AT&T hasn't always been strategic about that.
Okay.
So
So what else have they done?
that's been...
Questionable.
They've also been criticized for clinging to dividend increases even when their debt was piling up.
Oh, okay.
So it seemed like they were trying to keep investors happy in the short term,
Uh-huh.
but at the expense of their long-term financial health.
Right, so short-term thinking
Short-term thinking
versus long-term sustainability.
versus long-term sustainability.
Okay.
Exactly.
Yeah. So you said that they're trying to turn things around?
Right.
What are they doing differently now?
So, the Warner Media spinoff was a really positive step. It allowed them to kind of streamline their business and really focus on their core strengths.
Yeah.
They've also made debt reduction a priority,
Oh, that's good.
which is encouraging.
Yeah.
Um,
So they're taking steps in the right direction,
they are.
but they still have work to do,
Yes.
especially with those buybacks.
Right.
You mentioned they might be jumping back in a little too eagerly.
Yeah.
Why is that a concern?
So they've authorized $10 billion for buybacks.
Okay.
With a potentially another $10 billion on the way.
Wow, that's a lot.
Yeah, and some analysts are questioning whether that's the best use of their capital,
No, really?
especially, given their existing debt and ongoing investment needs.
Right.
So it raises concerns about whether they've truly learned from their past mistakes.
So their capital allocation decisions are something investors should keep a close eye on.
Absolutely.
It's
Yeah.
all about making sure that management's acting in the best interest
For the shareholders.
of the shareholders.
Yeah.
Exactly.
It's your money, after all, if you choose to invest.
Okay, we've covered a ton of information about AT&T.
We have.
Their earnings, their business strategy,
Uh-huh.
the risks they're facing.
Yes.
Even their sometimes questionable financial decisions.
Right.
But let's get to the heart of the matter.
Sure.
The question on everyone's mind.
Right.
Is AT&T a good investment?
That's the million-dollar question, right?
Yeah.
And there's no easy answer, unfortunately. It's not a simple yes or no.
I was afraid you were going to say that. So we've spent all this time digging into AT&T.
Right.
Can you give me some guidance? What are the key takeaways here that I should be thinking about as a potential investor?
Yeah, absolutely. So, starting with the positives, AT&T is a giant in the telecom industry.
Right.
And they're not going anywhere anytime soon.
Right.
They have a stable, profitable core business in wireless.
Uh-huh.
And they're making significant investments in fiber and 5G,
Right.
which are, essential for the future of telecom.
So they're playing the long game,
They are.
building for the future.
Yes,
That's good.
it can be.
Okay.
But remember, they're not without their challenges.
Right.
They face intense competition.
Mm-hmm.
They need to adapt quickly to that ever-changing tech landscape.
Right.
And, they need to get a handle on their debt
Yeah.
and make smarter capital allocation decisions.
That's right. And let's not forget about those lead-sheath cables.
Oh, yes, those
Yeah.
big question marks.
That's a real wild card
It is,
that could impact their bottom line.
for sure.
So there's potential for growth and upside here,
Yes,
but there are also real risks to consider.
absolutely.
Ultimately, whether or not AT&T is a good investment for you depends on your individual risk tolerance
Right.
and your investment goals.
Exactly.
Okay, fair enough. No crystal ball here,
No.
but at least I have a much clearer picture now,
Good.
thanks to this deep dive.
You're welcome.
Okay, before we wrap up,
Sure.
let's talk about valuation.
Okay.
You touched on it earlier.
Yeah.
But break it down for me.
Okay.
Is AT&T a bargain right now?
So the analyst's fair value estimate is $25 per share.
Right.
And the stock is currently trading around $22.67.
Okay.
So based purely on that, it does appear to be slightly undervalued.
So there's potential upside for investors who buy in now,
Potentially, yes.
But that fair value estimate is based on a lot of assumptions
It is.
about AT&T's future performance.
Yeah, things like revenue growth, profit margins,
Right.
the impact of their investments.
And we've talked about all those risks and uncertainties that could impact their performance.
Absolutely.
So valuation is just one piece of the puzzle.
Exactly, one piece.
You need to weigh the potential rewards against the potential risks.
Right.
AT&T could be a solid long-term investment,
It could.
especially if they execute their strategy effectively and navigate all those challenges that we discussed.
Yeah.
But it's not a slam dunk.
It's not a sure thing, no.
Well said.
Yep.
I think that's a great takeaway for our listeners.
Yeah.
AT&T is a complex company with a lot of moving parts.
Ooh.
There's no easy answer to the question of whether it's a good
You
investment.
have to do your own research.
Right.
Consider your own financial situation and decide if AT&T aligns with your investment goals
Right.
and risk tolerance.
Knowledge is power.
It is.
That's what the deep dive is all about.
Absolutely.
We've given our listeners all the information they need to make an informed decision about AT&T.
Hopefully.
So,
Yeah.
thanks for joining us for this deep dive into AT&T.
Thanks for having me.
We'll be back soon with another episode,
Yes.
exploring a different company and unpacking all those key insights that you need to know. Until then, happy investing.